I first want to acknowledge that I am meeting on the land of the Gadigal people of the Eora Nation, pay my respects to elders past, present, and emerging. And I am joined by my precious little foster dog, Oscar. So hopefully you won't see his face, but he tends to pop up in the middle of meetings. So apologies if that's the case. My name is Emily Adams. I am a social impact consultant working at Social Ventures Australia. And Social Ventures Australia is a national organization. We have offices in 5 or 6 different locations across the country, and we do traditional consulting services for organizations that are doing social purpose activities. So work with mostly nonprofits, but sometimes government, sometimes corporates that are interested in doing something meaningful for their communities. So I do a lot of work in strategy, outcomes measurement, program design, and the like. So that's a bit about where I work. But I want to give you a little background first about who I am, so you know who's talking, and then we'll dive into the project and then dive into the product in particular. I'll pull up some slides later in the session. They're very dense slides. We are consultants, so we tend to pack a lot of information into a slide. So I'll do a voiceover of those slides and of course stop throughout if you have questions. If you have questions as I'm just going through, please shout out. I can stop and answer them as we go through. That might actually be a better way to go forward. So who am I and why am I interested in this space? So I actually grew up in North Carolina, back in the States. That's where the accent's from, tinted by a little bit of time in New York City. And I actually got involved in the aged care space and end-of-life space when I was quite young because I played piano. And in the South, if you play piano, that means it's an asset for your grandmother to shop around. So she used to take me to all her friends and I would play piano for everybody. And I used to go to nursing homes and play piano for her friends that were living in nursing homes. And one day I ended up taking the wrong turn in the nursing home. And I ended up going into the Alzheimer's unit of a nursing home that had a particular branch dedicated to patients that were suffering from later stage Alzheimer's. And I had no idea what I had stumbled into, but was intrigued to say the least, very confused at my young age. I think I was 13, but intrigued. And the nurse knew I was in the wrong spot, but said, you know, if you're willing to, the patients here would love to hear music. So I played. And I got to know the residents there, and I went 2 times a week until I graduated for college. So I got really close to the nursing staff there and the patients there, a lot of whom had partners in other parts of the nursing home that I got to know really well. And some of them, their end-of-life journey actually played out in that particular ward. So that was my introduction to end of life. And since then have always been really passionate about it. So when I came to Australia and started working in aged care with SVA, I also became an end of life doula. So started doing end of life support work with people in my community and very passionate about that, particularly supporting moms that have recently lost a child. Particularly baby and infant death is an area that I'm quite passionate about because it's an area, particularly in Sydney, that we don't have a lot of support for those families. And then this project came up, which was a really good synergy between my personal interests and what was happening professionally for me. So I might just kick in there to the project more generally. And then I'll start bringing up those slides because it will take you on a bit of the journey for the project. So about 2 years ago, and hard to believe it's been that long, but about 2 years ago, the Commonwealth Bank approached SVA with a concern. And the concern was they were seeing about 2.5 years actually, and this was pre-Royal Commission. So this wasn't sparked by the Royal Commission. It was actually before those findings had come out. They were seeing a tremendous number of their consumers that were experiencing some sort of predatory selling in regards to funeral insurance. Oftentimes this looks like these insurance providers, one in particular that were door knocking in Aboriginal and Torres Strait Islander communities, that were selling products to people that were far too young to be purchasing funeral insurance, stipulations in the contracts that these individuals who signed up would be paying premiums in perpetuity for the rest of their lives, sometimes saving, $50,000 for a funeral, which those of you that are familiar with the space know that's an egregious amount of money. Also, if they missed one premium payment, would lose all of the payments they had put in to date. So they were concerned at what was happening in the financial services space in relation to funerals. And they essentially hired SVA to do a bit of a market sizing exercise to essentially go out and understand, is this a real problem? How big is the problem? And so we did a really short and sharp research piece where we did some analysis of what was happening. We went out and had stakeholder consultations in community and very quickly realized that the problem was much bigger than originally assumed, and that there were a number of problems that were all interrelated. And so what we kind of found out was it's not just about inappropriate financial products being sold to the wrong customers, misleading people, having unfair characteristics of the product, but also, and all of you will be very familiar with this, there was a lot happening in the funerals industry. So there were a lot of things about the funeral industry that was driving what we were seeing in the financial services industry. What I suppose a lot of economists call the waterbed effect, where you push down one side and it raises in the other. And CBA came to us after that initial research piece and said, we need to do something about this. Let's create a more fair insurance product. And essentially SVA said, whoa, 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 let's not just put another product out into the world. Let's think about what's driving these problems. And a lot of what we'd heard from community members is the price of funerals is just skyrocketing. There are two primary for-profit providers across Australia. They are continuing to consolidate, particularly in regional and remote areas, and buy up mom and pop shops that they keep the name of the family-owned business. So it seems to be an independent family-owned business, but it's actually under the umbrella of these big corporations. And they have the power, therefore, to continue to raise the prices of funerals. And as all of you would know, because people aren't talking about death and dying in a lot of circles, a lot of people are having similar experiences, but not necessarily communicating about those experiences. And therefore, the problem just kind of got out of control. So we raised this kind of two-prong issue with CBA, so Commonwealth Bank, who originally employed us, and said, look, we think there's something really big here. We're seeing that funerals is actually a primary driver of financial hardship across Australia, beyond what we know about not supporting healthy bereavement, informed choice, transparency, all the other issues we know to be true. It's also a major driver of debt across the country. So they essentially empowered us to say, all right, if you think that there's a solution to this, go out and talk to community, go see what you can do. So I might just pull up slides now just to share a bit about the project impetus. And again, please do jump in if there are any questions that are coming up, because I'm going to be throwing a lot of material out at once. And I'll just put this in slideshow. So we uncovered that there were a number of challenges coming up in the financial services market and the funerals market. So in the financial services market, lifetime affordability of financial products. So some people were paying upwards of $50,000 into an account over time, and then their funeral was only a $10,000 funeral or less. There was a lack of awareness about how certain products work. So not understanding that if you want to get if you sign up for a traditional funeral insurance product, and particularly the predatory products, if you wanted to no longer contribute or were unable to contribute, you actually didn't get your money back. So there was a misunderstanding in a lot of communities around the concept of insurance, thinking that what you were paying in was always going to be yours and that you would get that amount of money back. A really young customer base as well. This is so egregious to me, but that the majority of this predatory provider that I'm sure you all know who I'm talking about, the majority of their customers were actually under the age of 20. So they were targeting younger people. They were going to sporting events and raffling off TVs if you signed up for this product, and giving away footballs, and going to grandmas and grandpas and communities and saying, you need to really protect your family. And the way to do that is to sign your 18-year-old up for this policy, without people really having enough information to know that that's not the right situation for that particular child. So that's what was happening in the funeral services market. In the funerals market, we have high non-transparent costs of funerals. It does vary by community. There are some small providers, some ethical providers that are doing well by their communities. But the vast majority of what we were experiencing when we were talking to communities across the country was actually quite similar, highlighted by, if you've seen the series of reports that Choice did on funerals and the experience of both the cost of funerals, but the experience of funerals, people being pressured into funerals that weren't right for them, people feeling like they had to do certain things that there are no legal obligations to do, and people getting pressured around the shame of wouldn't your mom or dad or whoever they were putting to rest when they want this $12,000 coffin. Long-term indebtedness also becoming commonplace. So a lot of these for-profit providers are also now seeking financial services license so that they can, very similar to a car company, provide you a loan, but they're very high interest loans. So what this looks like in, say, the Illawarra, where Jenny and the original Tinder is Jenny can offer a funeral for, say, $3,000 to a community or to a family. And that family doesn't necessarily have that $3,000. That's a lot of money for a lot of people. And if they aren't interested in going through with the nils, or they can't find other buckets of money to help pay for that, they go down the street to one of these for-profit providers, and they're offered the exact same funeral for, say, $12,000, and they're given a loan by that provider at a 12-15% interest rate. So this is creating a tremendous amount of long-term indebtedness. And then double paying for funerals by Indigenous community members. And this isn't just about Aboriginal Torres Strait Islander peoples across the country. It's also about culturally and linguistically diverse groups and various religions that need to practice a certain way or have a certain funeral process to adhere to their cultural backgrounds or religious backgrounds. And what this looks like is, in a lot of traditional providers, they're not necessarily giving the option to do what is required culturally. They don't actually allow for those things. So what's happening is those communities are having to go through a package process. We'll pick a package out of a funeral service that looks like X, Y, or Z, and then doing their cultural practices on top of that. So actually double paying a lot of times for their farewelling. So I'll move quite quickly through this, but I just wanted to articulate that this is what brought us to the issue. And these are the people who've been involved. So there's a group called the Financial Inclusion Action Planning Group. I think that's their official name, but it's a number of financial providers that work on financial well-being and hardship, Commonwealth Bank being one of them. And they all identified this problem and said, let's do something about it. So they engaged SVA to convene the necessary partners to do something meaningful. Involvement with the banks, the financial services institutions that you see on one side, and their involvement has essentially been to cover the costs of SVA for convening groups and for providing capacity building support. And they're also supporting what we'll talk about in the product side. We've also been working with Financial Counselling Australia to try to build awareness of this. We're also working with legal aid and community legal centers to make sure that people who are having those conversations with people about their finances are able to understand the importance that funerals play in this broader story, working with government bodies, ASIC, the ACCC. They're very aware of the funerals industry, not just because of the Royal Commission, but it's been something that's been on their radar for almost a decade now. So they've been brought along on this process. We just wanted them in support of what we were trying to achieve. And then we've had pro bono support from Kingwood Mallison, Free Hills, and Macquarie to do some financial modeling for us. So it's a lot of really big players that are involved in this. And we had the two-pronged approach. So we thought that by supporting Tinder to replicate across the country, to bring meaningful, beautiful, affordable funerals to life across the country would help expand optionality for people, enable people to have a different experience, change that culture through experiential learning, and then at the same time start working towards a more ethical, fair product that would support people when saving for funerals, and encourage that savings behavior and pre-preparation, with the idea that we're really aiming for people to have a positive experience when farewelling a loved one, but also not be in financial hardship as a result. I'm going to go into dense slides now, and I will try to do just a really high-level voiceover. But I wanted to focus in on the product, and please ask questions as we go through. The concept here is that rather than insurance, a savings product and savings behavior is going to be a more beneficial way that people can prepare financially. There's a lot of contention in community about if insurance for something that is inevitable is appropriate in the first place. Now, of course, we understand that timing is always a question. You don't know when you might pass away and leave your loved ones with this experience they have to pay for. But a lot of people are of the opinion that insurance isn't appropriate for a funeral because it's inevitable that we will all die. Savings, on the other hand, felt more appropriate. So we started talking to a number of different groups about what they would need in order to save for a funeral. And I'm going to just give you the high level of what the product is first and where we are with it, and then go into the detailed thinking. So the idea of this product is, first off, not a perfect solution. So I just need to say that up front, because it's been a long time in the making getting everybody to agree on, and we're talking everybody, like the people who are philanthropically funding the product, the people who are going to be distributing the product. The financial market space is very highly regulated. It's very challenging to get anything through, and there's liability for all parties. So it's been hard to get agreement about what would meet the mandate or what would help move communities in the right direction. And it's not necessarily perfect in that I think this first iteration of the product out into the world is going to be seen as almost a pilot. So what does the demand look like? Who's taking up this product? Are the people most in need hearing about this product? Do they understand the product? Is it doing what it's supposed to do? The other thing that you'll note as we go through is the product is up to $4,000 of hardship cover. And a lot of people say, well, in a lot of areas, you can't buy a funeral for $4,000, and that's absolutely true. So we're working on modeling different amounts that you could save up to, and we're trying to figure out how best to communicate that it's going to be, in many instances, particularly where there's not a tender or a comparable, more affordable option, a contribution to a funeral as opposed to the full amount. The high-level idea is that there is a savings product that people buy into. They make weekly contributions or monthly contributions into a savings product, and that there is a philanthropic hardship cover. So there is a trust that's been established, and there are funders that are funding that trust, that essentially says, if you sign up for a savings product, this funeral savings product, and you're contributing regularly for a period of time. So the distributor said if they've signed up and they've been contributing for a year and they haven't missed more than, say, 2-3 payments, whatever they deem is most practical from them from a liability perspective, and the person were to pass away before they reach, say, $4,000, then the trust that's philanthropically funded would cover the remaining amount. So as a really simple example, I sign up for the Funeral Savers because I just want to get started. I want to start planning. I want to start saving for this. And we're really trying to emphasize the savings behavior. And I have been contributing for a year and a half. I would say $600 in the account, and I pass away unexpectedly. Then whoever is coordinating or planning my funeral is then able to have the rest philanthropically paid out. So they would get a check for $4,000, even if I've only contributed $600. You can save beyond that $4,000 point. You can continue to save as you wish. And we really suggest people have conversations about what they want for the funeral, what that's going to cost. The pre-arrangement conversation needs to happen. But the philanthropic cover is really to try to undercut this fear that's driving some of the insurance, picking up of insurance that's not appropriate. The other thing that's really important about this product is that children are covered. So if I have a plan for myself, and I have a child and my child passes away under 16, then the trust is going to fund that. You get a check for $4,000 for that child's funeral. And the reason for that was the idea of a child passing away was a tremendous driver for why people were picking up these insurance claims. And the philanthropists that were funding the trust obviously have an interest in making sure that there's a significant contribution made towards children's funerals, and that shouldn't be what children or what parents are thinking about.
Excuse me, Emily.
Yeah.
I just wanted to ask, you said for children under 16 years are covered. Is there a limit to the number of children?
That's a great question. No, we hadn't talked about a limit to the number of children. So there are two companies that are going to be the distributors of this product. They're two friendly societies that are values aligned and comfortable with distributing this product. We're still testing characteristics like that. How many children would you be comfortable with? How many missed payments would you be comfortable with to get the details worked out? But they have not indicated that there would be a limit to the number of children.
Okay, yeah, it's just we were talking earlier about, just focusing on sort of Aboriginal communities. And, the family unit looks very different in those different culturally, yes. Sensitive, well, I guess it's, kinship really. Yes. So that was the reason for the question.
And that's a great question. So hear you, Tanya, that is an incredibly complex thing we've been working with. So our next phase of this piece is we're going to be doing focus groups in communities across Australia for particularly Aboriginal and Torres Strait Islanders because of the different structure of the family. We got a lot of mixed feedback early on when we were testing the high-level concept of this thing out in the world from Aboriginal and Torres Strait Islander peoples. One of the big concerns raised was, this happens a lot in our community where grandma saved this amount of money and then somebody else dies and she gives that away. In the kinship group, there's kind of the concept of contributing to other people's funerals. So one of the really strong pieces of feedback we got from people that we tested this with was, you must make it that the person themselves passes away in order to access that money. Children being held off to the side. So that, say, if I had a policy and my cousin died, I can't pull down from the savings account to pay for my cousin's funeral. And that was actually advice given to us directly by the Aboriginal and Torres Strait Islander communities that we tested this with. You have to make sure that it's held for the person who has the policy. Otherwise, the money will be distributed before that person passes away, and you're going to have the problem in perpetuity. So you can only access the funds if you have a death certificate. The question of kinship groups is a really challenging one because the banks don't recognize those structures in that way. It would have to be a biological child. So that's
Yeah,
something.
because obviously in those sorts of communities, you know, it's not uncommon for aunties or grandmothers to be raising, you know, their children. Yeah, so obviously they're not the biological mother, but under kinship rules, they are the mother.
Absolutely. And I think the other challenge with this, and reason why I raised definitely not a perfect solution, a stepping stone and a longer term solution is this is obviously not going to cover the full cost of sorry business. Now, the difference in this product as opposed to other products is a lot of other products in the funeral space dictate how you can use the money. Once a person gets that $4,000 check or above that, if they've paid into the account, they use the money in the way that they need to for anything related to the funeral. So it can be sorry business expenses. And a lot of the traditional financial services market don't allow you, if you have money tagged to a particular thing like funerals, they actually don't allow you to say buy blankets or buy food for family coming into town or other things that are cultural requirements of the sorry business process. So there's autonomy about how the money is used, but it's certainly not going to cover the full cost of sorry business. So that's something, again, we're just working on building partnerships across government and across corporates to see how we might best solve that challenge, which is almost a whole nother challenge.
Sure. Thanks so much for answering the question, Emily.
Yeah, absolutely. The other thing that I think is really important about this is very different from insurance products is the person who has the policy always owns the money. So they can't take it out before they pass away, but they own the money and the interest. So at any point, even if they have missed so many payments that they don't get the hardship cover, they only contributed 3 or 4 times, they still have the right to that money and all of the interest that money made. So it's always their investment. It's always a savings product for them. It's never going to be reinvested, taken away from them to support other policies. So it's not an insurance vehicle. It's a savings product for them. So in that regard, even if they aren't eligible for the hardship cover, it's promoted a savings behavior, which is very different from what we're seeing in insurance. And what we're hoping to do is run this as almost a pilot for the first 12 months. So the hope is that the product is going to be available in the 3rd quarter of this year. And it will be distributed, like I said, by first off one friendly society, and then a second one is going to be joining us later in the year. And it's going to be to pilot those at a grassroots level. So talking with people that are part of the Tinder Network to say, if there are people that you know that need to start preparing or that are worried about the cost of funerals, seeing how the product works for those individuals and learning in that first 12 months, what's the take up? Do people understand the product? We need to go softly with this, slowly and softly with this. And the reason I say that is because there's so many things that came out of the Royal Commission that we have to be very mindful of, that we don't fall in the same traps as those products that created really bad outcomes in community. We need to be incredibly clear on the messaging. And when I say we, that is the responsibility of the distributor, but SVA is working and having conversations and focus groups across communities to get that messaging right. So it's really simple, really clear, and there's not a misunderstanding of the benefits. And then what the product also doesn't do. That's very important because we don't want to fall in that same gap. We also have to be really careful about regulation in terms of targeting particular groups. So the insurance provider that I spoke with you a bit about is obviously being dragged through the mud and will lose their financial service license most likely because they were targeting particular groups that were experiencing disadvantage, whether it was Aboriginal Torres Strait Islander people that were experiencing some sort of financial disadvantage or pensioners that weren't clear on the financial services market. They were targeting certain groups, and we are not going to be targeting anyone. So everyone can take this product up. I could go and take this product up. What we're really trying to do is start accessing that group that's in their 40s to 60s, aren't thinking about this yet, that might have a harder time paying for a funeral that's say $3,000-4,000 or more, and start that savings behavior earlier. We're also playing around with different amounts. So again, $4,000 I know is a contribution, not necessarily a coverage of a whole funeral unless you're in an area where there's an affordable funeral provider, which not all people in Australia are. And so thinking about the different levers we can pull, if we said you have to contribute for 2 years and you can get 6,000, up to 6,000 in coverage based on the modeling, is that a better outcome for community? So we need to test some of these things. The hardship cover, the philanthropic hardship cover, is a trust that people have donated into and will continue to. We have $100,000 committed every year for the next 3 years from our initial fundraising, but we're going to be doing more over time. And we put together an advisory group that's going to sit across this trust, that's going to be essentially managing the product. So how many people are taking it up? Are we, when do we need to stop distribution if we have too much demand? How are we messaging this? So all of those questions, but also they're going to be responsible for ongoing fundraising. And so far we have a couple people that are interested. 2 people that have formally committed is Peter Kell, the old head of ASIC, and then Fiona Guthrie, who's the CEO of Financial Counselling Australia, which are 2 really big players in this space. And they're going to be supporting that trust over time to make sure there's enough philanthropic funding in there to meet the demand that we're seeing for this particular product. And so the trade-offs we always have is we can serve more people, but that's going to decrease the coverage that we are able to give to each person unless we're able to bring in significant funding over time. Over the longer term, there are a number of options for what could happen. This is seen as almost a pilot to be a proof point that, hey, this is an issue. We need products that help people save, that help give that coverage and support if an unexpected death or sudden death were to take place. We need to make sure that funerals aren't creating long-term indebtedness across the country. So we're having conversations with government, particularly Treasury, about what they would want to contribute long-term. Is that something that the government could fund over the longer term for particular groups or for a whole of community? We're also having conversations about other ways in which that product might be made sustainable over the longer term. So looking at probably a philanthropic trust for the first few years, and then depending on how much demand we see, there are a couple options for what the long-term view could be. I don't know that I need to go into depth about much of this, and I'm happy to circulate these slides to anybody. But just to say that we've done quite a bit of testing around things like the messaging, things like the amount of money. That was a huge bit of work for us around what is realistic for people to contribute. And what we found is $15 a week was that critical point, that if you got higher than $15 a week, a lot of people weren't going to be able to contribute or participate. But lower than that, and you weren't going to be able to reach your target in a reasonable time frame. So that was the kind of push point, that it's about $15 a week of contribution for this savings product. That can be done weekly, that can be done monthly. And again, provisions for if people miss a weekly payment or a monthly payment, that they have some leeway, unlike kind of those premiums that you see with insurance products. And the way I suppose we see this rolling out is, in the first instance, it's going to be available through friendly societies. They're going to be sharing that information with their consumer base, but it's going to be really community word of mouth. The Tinder Funerals that's already operating in the network is going to have information about this product. The Financial Counselling Network across Australia will have information about this product. Other community organizations like legal centers are also going to have this information. And we'll make sure that we have kind of marketing collateral that's very well thought out in terms of wording and very clear and concise about what the product is. And So then, yes, these two friendly providers will be able to provide this product like anything. You just go to one of the providers and sign up for this product. So you could do it in-house. They're also looking about doing it over the phone for people who are living far away from any branches and how to make that fair. And then they'll talk you through the different components of the product. Again, it's just another savings product. It just has this added benefit of a hardship cover. I might stop there just because that's a lot of information, and I'm sure there are a lot of questions.
No questions from me. I think you've explained it really well, and yeah, I was just thinking I'd sign up.
Good. Yeah, and I think that it's really important that when we communicate, especially with, you know, the Tinder Network and the groups that we're talking to, it is a work in progress. And I have to tell you that we've been convening the trust manager, the trust establisher, the people who are going to appoint the trust, everybody responsible for distribution, the regulators around this product for 2 years it's taken to get to this point, just because it's such a complex space to play in. There are so many rules to consider. It has to be thought of in terms of what community, what's actually beneficial to community, one, and what is practical in terms of contribution. And so even to get it to this point, which I would consider it still very much in its pilot formative stage, has taken quite a long time. So hoping to use the information we get in the first year to see, just, is this resonant? Are people interested in this? Is this going to help us start talking about savings for funerals? Is it going to help us when we're having those earlier conversations about death and dying? You know, instead of a prepayment, that's another area that's getting more and more complicated and creating more and more challenges, is prepayment into these big for-profit providers, because they have financial services licenses and are able to reinvest your payments. They are trying to push prepayments a lot earlier now and a lot more frequently. But what you actually can get if you prepay for a funeral and you read the fine print varies very much by the funeral provider. So what happens is, I might go to a for-profit funeral provider in Sydney and they say, prepay for your funeral and your children won't have to think about it. And I prepay for what I think is the funeral I planned. And then in 2 years, the price of that particular funeral has doubled. And so my kin, or whoever's left behind, are responsible for that gap payment. Yet they've been told that my funeral's paid for. So that's a really challenging thing that's starting to happen a lot. I mean, it's happening a whole lot. So we're trying to have a different conversation about financial preparation. Prepayment might not be the way to go. How about you put that account in a savings account that's earning interest for you, and then have a conversation about what funeral you want and have a conversation about what that might cost. Just a more realistic conversation, because yeah, that's happening all the time. We hear people that say, my grandfather put $10,000 away from his funeral, so we didn't save anything, and then it ended up being a $20,000 funeral, and we didn't want to cut out what grandpa said he wanted because that would do a dishonor to his memory. So now we're on the hook for $10,000. Now we're in debt again. Challenging, tricky space.
Hello, sorry, haven't got a, my name's Tara Kelly. I haven't got a camera up at the moment, and I came in a bit late. But I think it's wonderful. I'm very impressed. Now, I just, one quick question. Have you ever contacted a 24 carat in Tasmania? No, I'll just keep that. Just wondered. I'll keep going on with that. Also, I was wondering, when you're down the track and where you're operating, I really worry about the big providers, like for-profit ones, of when it's a customer, say, engages with them, and then say, for example, history, say their grandfather used that funeral home, and then now they, how do you think they're going to react to you? I really worry that that they're going to come out in some sort of way of trying to fight. I don't know. Do you know what I'm saying? As far as, yeah, is there a way to mitigate that somehow? I don't really know how they're going to react, and they're quite powerful and it's not pleasant. So
yeah, we know. Yes, and quite litigious.
yeah.
Yes. So the stance that we've had on both sides of the project, so the Tinder Network, who are starting an alternative, a different way of doing funerals at a lower price point, and of the product has always been never to, in a public facing way, cut down these big for-profit providers, never talk about us versus them, but rather position these as alternatives, as ways that expand choice. I think one thing that we're all very clear of is that actually a lot of the funeral providers that are working at these big firms are very much value aligned with what we're all talking about here. They just aren't the decision makers.
Yeah,
The structure. So it's not to say that anybody working at any other funeral home is not doing this work for a valid reason, or don't have some of the same values that we all are talking about. So it's always about choice and collaboration. I think the other unavoidable thing is we will have to work in collaboration with some of these big providers, because they own some of the crematoriums that we'll need to use. They own certain things that we might want access to. So it's this concept. And if someone wants to use that, have that experience, that's their choice as well. So it's never about, you don't want that, that's bad, and this is good. It's, do you know what's out there? Do you know what's possible? Here are all your options, and here are the implications of those options. And it is totally the person, the families, the friends' choice. So I hear you. It is something that we're really cognizant of. It's why we're really careful about our marketing externally.
Yeah, your launch would be, that if that is so clear. Yeah.
Critical. And, you know, the same with when we're engaging with the HCCC and ASIC. They already have these guys on their radars. So we don't need to go there. We just need to say what we think needs to happen in order to allow for the most choice and best outcomes in community. And if what happens is over time, this product and the funeral network that we're trying to create means that these companies take a different approach to funerals, take a more expansive approach, inclusive approach, drop their prices, are more transparent, that's a great outcome. That's a great outcome, because that's what we're trying to do, is shift the way in which funeral processes are handled. And when people know that there are options and that they have rights, we imagine they will engage with these companies in a different way as well. They might ask different questions. They might want
be empowered.
Be empowered for different things.
Yeah.
I think what we're seeing is, and there are a couple bad eggs, like in every industry, right? There are a couple bad eggs, so I'm not discounting that. But the thing about the funeral provider is that because people don't know what their options are, they hold such power at a time that's so vulnerable. So it might look like they might have my mother's body, and I don't know what my options are around my mother's body. What can I do? When can I see her? My sister comes into town a week after, or a couple days after I'm already here. I want my sister to be able to see my mom's body. Well, that's another $1,000 for us to have another viewing. It's that power dynamic where maybe I don't have $1,000. So what, my sister's not going to be able to see my mother? That's my mother. So we want to be able to provide a different way of being for people, and want them to know that that doesn't have to be the dynamic that they have with the deceased, that there are other options, other rights. It's just about that expansion of information. And alongside both of these things, that we're going to have a huge undertaking of education, like telling people what their rights are, telling people what their options are. What does a happy death look like? What is a funeral process? What could a funeral process look like? You can have the $15,000 funeral. Like the Macedonian funerals are huge in the Illawarra. They have massive events, and that's exactly what they want. So it's about just facilitating a process that works for the people that are involved. Any other questions?
So Emily, is there an upper age limit for qualifying?
They're working on that now. In terms of upper age limit, the one that's the trickiest is terminal. That's going to be a really tricky space for the people doing the liability for the accounts. So a person might know that they're terminal and only have a year. Are you going to be able to get the hardship cover? So we actually,
that was my next question.
Yeah, and that's unfortunately not going to be in our control, but something that the distributor has to grapple with. And one of the things, again, that we're hoping to do is say in the first instance, they say, we can't cushion that. We need to know that data point so we can go to government and say, these people over this age need support and aren't getting support. These terminal patients that need to be able to save and are already paying out of pocket for their treatments need support. And these are how many people are coming of that group to the providers to look for support. It's a data point that shows indication of need. And those are kind of two areas we're having a lot of conversations about that I think will be a challenging conversation. And the third piece, actually, Tanya, is what happens to all of these people who are on this predatory provider's client list right now? There are some 20,000 Aboriginal and Torres Strait Islander people that have signed up for funeral insurance products with this provider that's about to go under, or has the potential of going under. What happens to all of these individuals and families who have paid into these products for years, sometimes decades, if the funds are being held offshore? What is the government going to do to support these people? So one option we're talking to about Treasury is, what if government were to mandate that all of them had this product and they contributed to this product for those people? They said, we're going to find this company and we're going to give everybody the $4,000 base starting point or something. There needs to be some conversation, because that's a tremendous number of people that are not necessarily going to get their money back if something goes wrong with the regulation around this company. I mean, we're really just hearing so many, it's hard to believe when you just read about it, but we're hearing stories all the time. People losing $15,000, $20,000 because they missed one payment around Christmas. I mean, and now thinking about the economy and the COVID environment and how many people have lost their jobs, and what we know we will see in the next year or two, that's only going to get worse. So we have to do something now to try to start working towards a solution. And I think that's kind of my bugbear too, is so many people and stakeholders that we've engaged say, like, we have to get it perfect before we get anything out there. And I'm like, let's get something out there and improve it, because we could waste 5-10 years waiting for the perfect solution that may never come. And that's too long. That's just too long. People need an option now. So we need to start working towards a longer term reality that we all want, which is people can farewell their loved ones without financial hardship and have a healthy bereavement process.
So you talked about the contribution point being at $15 a week. I'm interested in sort of, I guess, the conversations around that and the scope for that to be reduced, just in a context of, people that find themselves, on job seeker payments. I mean, $15 a week, $30 out of your fortnightly job seeker payment is a significant amount of money.
Yeah, we've talked about this quite a bit actually in relation to Centrelink payments. So can there be payments out of your Centrelink payment? That is an ongoing conversation with government. And part of the challenge there is that the Centrelink took 2 years trying to remove this funeral insurance provider from their ability to do automatic debits. So there was if you signed up, they could take automatically from your Centrelink payments. It would just... Yeah,
I'm not talking so much about direct debit. What I'm talking about is the question of affordability
for other people
around the $15 a week $30 a fortnight out of a job seeker payment is a significant amount of money.
Yeah.
So I guess the whole thing is designed on the premise that it's going to cater for those in the lower socioeconomic range. And I'm already seeing tensions there with affordability for the very people that need to get access to these types of savings plans.
Yeah, I hear you. I think that is one of the ongoing challenges is going to be affordability. I think one of the things that we've talked about over the longer term is setting up a separate trust, that there's a two-tiered system based on a bit of means testing. One of the things that challenges us around death and dying and means testing is guilt, shame, dignity, making sure that it doesn't feel shameful to anybody that's experiencing either the affordable funeral or this product. But is there a way in which we could say to the government, these people aren't able to contribute $15 a month. It's the target demographic you're looking to support. You need to contribute this amount on their behalf. So that's one of the things that we're looking at longer term, is that if a person can contribute $30 a fortnight, that they are doing so. And if for any reason it's determined that they can't, is there another mechanism, say a government contribution, where they might be supported to make that contribution? That's a challenge though. And one of our challenges there is getting government to agree that people need that support. And it changes with government. One of our challenges has been, as soon as the new government, state government, as you would all know, or federal government comes in, the priorities switch. And the challenge of this has been, how big of a priority is this in the grander scheme of all the things that governments are contributing to right now with COVID? And it's in some ways raised the profile of death and dying a bit. It's brought the conversation a bit mainstream because of the world right now that we're living in. But at the same time, there are so many other things happening that it's hard to get the attention of government around this. And to be honest, it's hard to get people to acknowledge that the current markets are not working. It's this kind of concept. We've been having a really long experience with the public benevolent institution application for the Tinder Network, because the concept in law is that it's actually not charitable. It's more, everybody goes through death and dying. So it's a universal human experience. It's not something that's experienced differently when people have some sort of disadvantage or are marginalized in some way, shape, or form. So one of our longer term conversations with government and with the legal system is, just because this is market price does not mean it's fair. And market price means very different experiences for different people. And it should be a basic human right that we can die and farewell our loved ones, because we all die. So you can't make it an insurmountable thing for an individual to farewell a loved one. But it's an education of those groups as well. Yes, Gina, hi.
Hi. I'm just wondering how all of this fits in with state and territory that provide funerals. They've got the unfortunate...
Yeah, the unfortunate pauper's funeral.
Yes.
Yeah.
How will it fit in? Was there room to get the original funding from the pauper's funeral into this?
Yeah, it's a good question. We've been trying to track that down for many months. So the way that it works now is the health department by state has contracts with one particular funeral provider that does all of the pauper funerals. I hate that term, but that's what they officially call it, at least in New South Wales. Funerals without means. Yeah, so they actually pay, it's over $4,000 per funeral to a particular funeral provider to do a burial. And what that tends to look like is they might give $4,500 to a provider because someone's died without means, and say Wayside Chapel in Sydney has let them know that one of their residents has passed away. The government pays that provider that they have an established long-term contract with. These are long-term contracts, which makes them really difficult to redirect the money. And then they do a simple cremation for $1,000 or less. So what we're trying to advocate for at the national level and state level is that's a tremendous amount of money to be allocating to one particular funeral provider. You could do something else with that money. You could still have that same experience, or you could provide a really beautiful, meaningful funeral for that person and their community, whatever that community looks like, for that amount of money. It doesn't need to just be.
It's quite a large amount of money. If it's 4,500, you can get funerals cheaper than that now.
Absolutely, you can. But it's a fixed amount of money.
Yes.
And it does vary slightly by state, but it's a fixed amount of money, and it goes to that funeral service provider that they have a contract.
It should be easy enough to get into, shouldn't it?
You would think so, but Department of Health is one of the hardest to crack, to be honest.
Yeah, I've worked for them.
Yeah, it's been really difficult for us to have that conversation. And again, these providers aren't necessarily doing anything intentionally egregious, and they're not necessarily doing anything salacious with this money, but it's just their established relationships, and because it takes energy to reevaluate who other providers could be that could do it at a lower price or that could provide a different opportunity, the Department of Health tends to just renew the contracts. It's not even very clear to most people who have the contracts. Like, it's taken us a long time to even understand that there is an established long-term contract with one provider. So that's one issue we're facing. And the other, Gina, is more and more so these different funeral providers are establishing relationships with hospitals, where if somebody dies in a hospital, which we know the vast majority of people die in an aged care home or hospital, palliative care, hospice, if they die in a hospital, that their body is automatically sent to a particular funeral provider.
Yes. I've been to a pauper's funeral in Queensland, to a burial, and very little different from an ordinary funeral.
And that's a really beautiful experience if that's the case. I've been to a few just out of curiosity, and we were trying to understand better what was happening, and oftentimes it's just a simple cremation.